remember the first time I opened the chart and I felt overwhelmed. I thought that in order to be profitable, I needed to find an indicator to tell me exactly when to buy and sell. And of course, I lost a lot of money until I realized that price action was the real language of the market. After watching charts and learning painful lessons, the engineer in me found a way to simplify it. In this video, I'm going to show you exactly how to read price action and enter trades using 3 simple steps so that you can save some time on your trading journey. So what was the problem? When you look at a chart for the first time, you see candlesticks like this going up or down, and you're wondering, okay, where do I buy? Where do I sell? It's not about reading the candlesticks and understanding bullish candles or bearish candles. You need to know what price is actually telling you. In my own case, I skipped steps. I made it significantly worse for myself. I had the MACD, I had RSI going up, I had volume, indicators, clouds, trend lines, everything known to man on the chart. And in 2021, yes, I was losing money then. I was losing money because I didn't even give myself a chance. I didn't strip it all down and go back to the basics. So what changed? I decided to take myself seriously and learn everything from the foundation up. Now, before I continue with this video, we're going into the second week of me live trading for free in my community, my free community. So if you're interested in that, click the link in the description to join. This is the second week. I'm doing it until the 31st of August. So if you're watching this video, count yourself lucky. What changed? I decided to simplify everything into 3 simple steps. Step number 1 is vibe. I call it the vibe. It starts here. If you don't understand step number 1, you can't proceed. That's how it works. You need to understand step number 1 to know what the vibe is on the chart that you're looking at. And then we're going to go over location. You need this. You need to pick this up before you proceed to the last step, which is your execution. You need to know how to execute. If not, you won't be able to take trades and you'll be relying on somebody for your trading journey and your future. So now I want you to think VLE. That's how we're going to put it in our heads so that we remember each step. What is the vibe? What do we want to get out of the vibe step? At the end of the vibe step, don't worry, I'm going to go over an example step by step so you can put it all together. And if you want the link to a video where I live traded the example I'm going to be showing in this video, comment example down below and I will send you the link. So for the vibe step, you should be able to answer the question, what is happening on the chart? This part is very important. You can see why I said very important. You need to be able to answer what is happening on the chart, and I'll show you how to get this answer. The second step, location. You need to be able to answer, where are we going? Where is this chart moving to? If you can answer this, then you are halfway there. To complete the final step, you should be able to answer these 2 questions. Question number 1, where do we enter and exit? And question number 2, where is it invalidated? So you're going to put all these steps together, V, L, and E. Think about it as, what's the vibe? You're talking to your friends, what's happening? What's the vibe? Where are we meeting? Location. And then execution. How are we going to get there? How are we going to also exit? And when is this plan just not going to happen? Or where is it just going to get to a point where like we just cancel plans? Think about it that way when you're looking at the charts. I'm going to go over an example step by step, showing you the thought process so that you can put it together. And make sure you leave a comment if you have any questions. In this example, we're just going to go over everything step by step. What is happening on this chart? As you can see, if you look at the past month alone, Tesla reported earnings on this day and it gapped down. What do we know about gaps in the market? Gaps tend to get filled, and 70% of the time they will get filled within 48 hours. But if they do not, and at some point in time you see price move in the direction of the gap, it would most likely get filled or at least reduce the gap significantly. And as you can see, Tesla right now is inside the gap area. What is the gap area? You can see from here to this point, and Tesla is entering that gap area. So how do we know this? You can see that Tesla is having this nice staircase movement and creating higher highs and higher lows. So we know what the vibe is. Tesla is making higher highs and higher lows and is trading into the gap. So how do we want to partake now? This is where we go to step number 2, location. Where are we going? How are we going to participate? Where's the bus stop? Where's the pickup spot? We want to mark out key levels. So we're going to mark out this high, the most recent high that was created. Once we mark out that most recent high that was created, we also want to mark out where price will move next when this most recent high gets taken out. We look for pivot levels where we had strong reactions, price bounced off it. You can see right here, price bounced off and always started to create new highs from this low right here. So I'm just going to mark it out. And then we can also mark out this area as well, this 368 area. So once we do that, there's another level we have to mark every day, and that is your previous day's high and your previous day's close. And you want to use color to mark it out. So you can use green for the highs, and you're also going to mark out the low, which is this level right here. And coincidentally, it's this level right here is a potential higher low. The reason why I said potential higher low is because this high has not yet been taken out. In fact, the previous day's high has not yet been broken, so we can't really call it a higher low until a new high is created. So as long as price respects this low here, Tesla is bullish. It is still a buy until it breaks this low. Now we're going to then move on to the next step, which is your execution. Where are you going to enter, where are you going to exit, and where is your trade invalid? So this trade is a trade that I took with my free community, and if you want the link to the trading day, just comment below and I will send you the link so that you can watch how I explain this trade to them and how to even manage the position or look for secondary entries if you miss the move. We're going to play this out and we're going to look for an entry. So the first minute played out, and you want to mark out your opening print. The opening print is always used as a reference point and a guide to be able to have extra confirmation on your trades. When price is above the opening print, there's a chance that it will continue to grind higher. If it's below, there's a chance it will continue to move lower. Right now, this is below the opening print, but price is respecting the previous day's high. And what I tell you about when price holds above the previous day's high, there's a chance it will continue higher to the next location, to the next liquidity level. And then if price holds above this high here, 351.54, there's a chance it would move higher into this 364.06 level. You're seeing that price is holding it 3 minutes in, but that's not enough information. Let's let the first 5 minutes play out first. 5 minutes has played out, we're still holding above the previous day's high. Where do we want to get interested? There are two ways you can take this trade. Depending on your risk tolerance, you can enter this trade as this candle here closes, and your point of invalidation is when you get a candle closure like this below the previous day's high. It means that the chances of this continuation has significantly reduced because not only are you below the opening price, you are now below the previous day's high, which means that you would most likely push down into this previous day's low, which is also your previous higher low, to revisit it. You can enter the trade here and have a low risk, tight stop loss on this trade, but then you're risking price rejecting the opening print and also failing. If it rejects the opening print, it could just fail right there. That's your risk. But your stop loss is so tight that even if you enter this trade, you would still lose small. You can take the 355 calls or 360 calls on Tesla, 360 if you want to be able to buy more contracts on Tesla. Since this is a Friday, you go to next week expiration. Especially if you're a beginner and you don't really know how to manage or trade options well, buy time. You can either enter there or you wait for price action to give you more confirmation, and you wait for the opening print to be reclaimed and for price to continue trending higher to show you that, okay, opening print has been reclaimed. It means that there's even more reason that price will continue higher. Buyers have shown their strength. So now let's play this out and see what happens. See, price is holding above our entry. It has reclaimed the opening print, came back down. Price coming back down here is not really a sign that you should just get out of the trade. Oh, we've rejected the opening print. No. Like I said, if you entered the trade here, your stop loss is always the previous day's high, because that's when you would have your invalidation of this trade idea. And then your target, your first take profit, will be higher than someone that entered at the previous day's high confirmation. First take profit, if you entered when price reclaimed the opening print, then your target would be up here. So now you see that price came down, formed a higher low, because this low here is higher than this low that is put in. Price is still respecting the previous day's high. Now we just needed to close above the opening print and push higher. As you can see, we got price pushed above the opening print, trying to hold that opening print. You see that price just hit our first key level. So if you enter this trade down here, you have gotten your first take profits. Someone that entered this trade on this opening print reclaim needs to wait for price to push higher first. They waited for more extra confirmation. So the stop is a little wider, just means that now the move has to really happen before taking profit. So which entry would you have taken? Are you someone that wants extra confirmation, or are you somebody that would just, okay, I'm just gonna take the previous day's highs holding? I don't care that the opening print is still above price at this moment. As long as previous day's highs holding, I'm gonna take the trade. There's no wrong answer. So price broke above that key 351.54 level and even hits the target of someone that entered later on when they got extra confirmation. In terms of holding this trade longer, you can see that the trend is just up. We don't see any strong pullbacks. So there's no reason to exit this trade. You just manage your position. Price is holding strongly. You're seeing that higher highs and higher lows are being built. That means you can hold this trade until that 364 level actually hits. And does it hit? Yes, it does, but it took hours to play out. You just patience before it ended up playing out. If you look at my times here, you're probably confused. Oh, but the market is not open. I'm on the Pacific time zone. So this would have been around 11:07 Eastern time when price finally hit our first bust stop. So as long as trend holds, what does that mean? You're not breaking the trend. The trend is still intact. You pushed high, you created this high. As long as this price holds this high that we created here, we can still continue to hold this trade. And you see that we got a push. We came back down again. We respected that structure and then we pushed into that 364. If you have any questions, let me know in the comments and I'll do my best to answer them. Thank you so much for watching. I will see you next week for a brand new video.